Hello guys, Ernest here from Nest Capital. Um, this morning, looking at the charts, I'm really going to have to break down my analysis some more because of one of our followers requested for this, Mr. Shu Clarkson. Um, so, Mr. Clarkson, this video is for you. So try and pay close attention because I'm going to try to be as detailed as possible, and also I'm going to try and take it slow and try to give you a better breakdown of my analysis of how I look at the market so that you can really get the picture of what I do when I come in to the market in the morning for the fresh day and what I look for, right? Okay, so now today is Wednesday. Okay, today is Wednesday and this is the morning, my time. So currently it's 8 a.m. in the morning. And I just opened the charts and this is what I see, right? Now, what do I do? Okay, first things first, I look at previous action. Okay, now so far we've had some push to the downside. This was yesterday's analysis and you saw how it played out. So basically now I know, okay, we are still in that downward trend, that downtrend. Okay, if I tilt the chart this way, you can see that it's been on a downtrend quite a while, right? Now next step, I come back to the present. Okay, I pay attention to the present now. Okay, that is what the market has done so far. That is what the market has done previously. That's what the market has done yesterday. All right, what is the market doing now? Because I am here now and I want to trade now. I want to pull the trigger now. I want to know what to do now, not yesterday. I've seen what the market did yesterday. That should help my decision for what I want to do today. Okay, so I'm looking at the market now. What has the market done recently? Okay, so far, first things first I will do right now is, okay, I'll mark out my structure levels. All right, pretty simple. So this is my structure level 1. I also see structure level 2 right here. Okay, next structure level is this. Clarkson, I hope you're paying attention because I'm really doing this just because of you. As you requested for this. Okay, now I've marked out my structure. Remember, I said don't be a predictive trader. You cannot predict the market, okay? Because no one knows what will happen in the future. No one knows the future. No one knows that. No matter how they try to tell you, right? No one knows, right? We can only work with the data in front of us. We can only work with the information the market gives us, right? So we should be reactive traders. We should react to the market, not try to predict the market. Okay, that's where most people get it wrong. They want to predict where the market will go. They're going to say, okay, I'm going to buy here because the market will go. The market can just keep continue tanking. Okay, it's just like the story of buying the dip, right? You buy the dip and the thing keeps dropping. It's just they give it a term, the knife wedge or what. Okay, so you need to watch. Okay, what is the market doing? If the market is going down, then go down. Don't try to buy the market and say, okay, it's going to turn around here. You don't know that. No one knows that, right? So we are basically reacting. So what I want to do, I've marked out my structure, right? And I'm waiting. At this point, after marking out my structure, I wait. Now, what I'm looking for here now is, remember, I don't like to have a bias, right? If we have a trend, yes, I'll be interested in selling down, right? I'll be interested in selling. I'll be interested in joining the trend to the downside, right? But at the same time, always keep an open mind because the market can go wherever it wants to go. Okay? Just like yesterday, I told you guys I'm not going to stick to the downtrend, even though it's there. If there's an opportunity to the upside, we take it and make our money and get out of the market, right? So now I've marked out my structure levels, right? What I'm waiting for now in this case is to get a good close, all right? That is next step. You want to have a candle break that structure and close above it. Well, okay, a good candle break with momentum, not just any candle. So you can't just come and get maybe a candle that breaks and then has a weak. That means there's some rejection there. That means there's a force fighting it and there's a possibility it's not going to the upside. It will still come down, okay? But if you have that strong momentum that closes above that level, take the shot, all right? Either way, remember you might do everything right and still be wrong. It doesn't matter. But this way, as a trader, you are at peace because you followed all your steps, you did everything right, and then the market went against you either way. Okay, and that's where good money management comes in, right? When you enter the trade, you want to make at least 1.5 of your risk, and you want to make or 2:1 of your risks or 3:1 is your risk, right? Because that's how you be profitable, right? But thinking that okay, you'll never make a loss, that's wrong mentality. Okay, you might even make a loss twice, even by doing the right thing. So the main thing you're looking for, a good candle close here. Once that candle closes with a good, you have to observe the candle itself, because if it's not strong enough, then it's a risky trade. Okay, if you have that strong momentum and it's closes, take the short, put your stop loss accordingly where you want it to be, and then go for your first profit. Okay, always take your first TP and then you can leave the rest, because that way you have something on the table and to cushion you. All right, it just is that simple. On the downside, we'll get a good close, you take the shot. All right, there's no magic or secret formula about it. Keep it simple, right? Keep it simple. Once you get that close, you take the shot to the upside. Like now, I'm looking at the structure of the market right here. I'm waiting for this candle. If this candle closes above here, this is the short I entered yesterday after the close of this candle right here. Okay, after this long candle closed below this structure here, this was the main level I was looking at. This one here, you can see it right now. After the candle closed below it, I took the shot, right? It hit first TP and then I was holding for the rest, right? But it's not coming, right? If it continues, awesome. But once things have changed, this structure breaks above, once the candle breaks above this point, right, I would close out this sell trade and I'll enter my buy. It's that simple. Keep an open mind, okay? Now when we get a close on the downside here, awesome, I'm entering another sell trade and I continue the trade. It's that simple. Okay, so I hope you get this this time, Mr. Clarkson. And if you have any question, feel free to reach out to me. My email is nestcapital@gmail.com. It's pretty simple. So feel free to reach out with me if you have any questions, and I will be willing to answer them. Okay. All right, guys. Let's see how it goes. Happy trading. All right, guys, and Clarkson, as you can see right now, um, I have gotten on a trade right now. When this candle, this first bullish candle here closed, this one right here, I did not enter because I didn't like the rejection on this week here. Okay, on the first one that broke above the structure, so I waited for the next one. When this next candle broke the high of this other candle, that was when I considered going in for a buy. Okay, because I didn't like the way this other one closed. Okay, so now I have a close above this, but not the way I wanted it. So that was why I waited for the second one. Once the second one closed, when the second one broke the high of the previous candle, then I joined in for a buy. Okay, now I'm going to set my stops. 20, 7, 7, 10. All right, now I'm looking to take first TP. The right spot for first TP actually is, yeah. So the right spot for first TP is supposed to be this 29.76. Okay, it's not far. It's basically a scalp, but either way, that's the right place first TP. So we're gonna put first TP for illustration purposes here 29.76. Okay. 29.76. Then the second TP is going to be 21.156. 56. And then I'm gonna hold the rest. Okay, I'm gonna hold the rest, or we can even say, okay, let's take third TP at 21,260. All right, 21,260. That's the final take profit, 21,260. All right, and then we'll call it a day, 21,260. All right, that's it. Pretty simple. Okay, now pay attention. A lot of things I've been taking care of here. Proper good risk to reward ratio, because this is one. This right here gives us something close to 1.5, not 2 is to 1 risk reward. This one is more than 2 is to 1 risk reward ratio. Okay, that way when you win a trade, it covers all your losses. All right. Okay, so let's see how it goes, guys. Okay, guys. Update on the trade. As you can see, our first TP, second TP has been hit, and the third TP was also hit. This probably is some crazy move right here. I don't know if it's probably news, but either way, we've achieved our first TP. This was right here. Our first take profit was right here. Second one was here, and the third one was here, and that has been achieved. Okay, it's pretty simple, guys. Clarkson, I hope you learned something from this video, because I actually did this because of you. So take your time, sit down, watch it, analyze it, and get the hang of it. All right. Okay, guys. Happy trading.